markets are rallying into the close. We've got Russell now up 2.5%. The NASDAQ's up 1%. Bitcoin's at a 5% move. Let's bring in Phil Streible for a chat about the market. He's the chief market strategist at Blue Line Futures. Phil, what grabs your attention the most in today's session?
Well, I mean, it was the snapback. I mean, that CPI number yesterday, it just represented a small derailment of the current rally that we were going on right now. I mean, it is going to push forward those interest rate cut expectations, but the reality is that interest rates aren't going back up to all-time highs. The Fed is not going to hike rates. It's just going to take a little bit longer. We got really good earnings. We got a good economy. We've got good employment. I think it's risk on right now, and the reflection is there.
Okay. Thinking about where it can go then, I mean, what will be required to get us kind of back into the bond rally mode? I mean, the stock rally mode is there. What about bonds? How important is it to keep yields from going higher?
I mean, you look at the yields. I mean, it's just we had a little bit of volatile data. I mean, we had, things that are very volatile. We have like housing, shelter, medical supplies, insurance, things like that. Those components of the CPI were what caused the volatility in here. Now, when you go a couple months out, those things will start to simmer down. And that's where you get a reset on interest rates. They start coming back down again. Two-year yields down about 1.48%, 6 basis points right now. I think that's where you start to get the bonds going back up. Gold starts to go up with it. So I look at these as long-term opportunities in some of those asset classes.
Okay, so maybe a little dip buying in bonds from the last couple of weeks?
Bonds and gold, I think so.
Okay. All right, so the dips are fairly limited. One other category that does have some pretty steep declines, though, since we're kind of in that group, let's talk the commodities. Crude's firming up, but natty gas is like disappearing before our eyes. Most other commodities are too. What do you make of this?
Yeah, we were kind of joking around because like natural gas is like an invisible thing, right? But we've got real uses for it. Where Bitcoin is this other invisible thing that we don't know what those uses are. So it's a tale of two extremes. You look at Bitcoin year to date, up 22%, whereas natural gas year to date, down 24%. The 1 year Bitcoin up 113%, natural gas 1 year down 55%. So it started off as a joke in the office. Hey, can natural gas go negative just like crude oil futures could? And it's the reality that there was no place to store that crude oil. That's why it went negative. So if you wanted to sell it, you had to pay someone else to store it. So fundamentally on the natural gas side, we've got a mild winter. The concerns about supply have evaporated. The current inventories are 7.8% above the 1 year average, 10.65 above the 5 year average. So if you're a producer, you need to hedge that forward production. Now, here's where things get a little bit interesting. If you Google negative natural gas prices, it's already happened in 2020 and in 2022. West Texas natural gas prices went to negative $2. So producers had to take some supply off their hands. And where the negative play comes in is that the regulators limit the amount of natural gas that producers can burn. It's known as flaring because it releases carbon dioxide. And guess what's getting canceled this year? Liquid natural gas. The environmentalists are after the Biden administration, and they've got to get this environment buttoned down to secure those votes. So natural gas stockpiles are going to continue to build higher.
Interesting. So it seems like you think this thing might be literally heading to zero. Or could
I'm telling you, it's a joke. You had the options guy just on Rick a second ago. I mean, I'm surprised he's not talking about May $1 puts in natural gas. They cost $200. I mean, you get two of them, you double your money on one, sell one, you got a free lotto ticket. Not a recommendation. I'm just throwing it out there as a fact.
And one of the biggest reversals of sentiment over like a 2 year period, possibly ever in natty gas, when there was panic in late 22, early 23, that like Europe wouldn't even be able to heat itself. Natty gas was going to be so scarce. I mean, what a fade that was. Incredible stuff. All right, so at least if it gets cold, we're prepped. We can heat our homes for cheap. Seems like maybe the only thing that can save natty gas right now is like a day after tomorrow winter storm. Give me a Bitcoin thoughts as we're ramping up here. How high can we go?
I'll give it to you. BlackRock Bitcoin ETF, they have over 100,000 Bitcoin under management. Investors keep accumulating the spot Bitcoin ETF Daily inflows broke another record, 631 million, and it's only been trading for 22 days. Now, here's where things get interesting. Rewind back to November 18, 2004, GLD was launched, the gold ETF. It surpassed $1 billion in assets within 3 trading days. We went from $400 on gold to $1,900 in a decade. Who knows? Bitcoin might hit $100,000 this year and $1 million in a decade. Just throwing it out there.
All right. Well, you're not the first. So we've heard I think you can find about any price level prediction for Bitcoin out there. So you're not alone.
You got to get to 53,000, then 54, then 55. So just keep throwing those price predictions out.
Okay, love it. All right, thanks, Phil. Appreciate the thoughts. Chief Market Strategist, Blue Line Futures. Good eyes on the natty gas trade too. Pretty amazing, I think. It's just in a total free fall. All right, speaking of free falls, up